Greetings everyone, welcome aboard. Happy Tuesday to you guys, March 15th, 2011. We are making our way through this OPEX week. Boy, if you haven't, if you weren't here yesterday, had a really tough day yesterday. And here we are this morning, Tuesday morning of OPEX. Now remember, this isn't just any other OPEX, right? This is quadruple witching OPEX. This is daylight savings time OPEX. This is end of the first quarter OPEX, right? The list keeps going on and on and on. Now, luckily today, we didn't have as much of the post-earthquake distraction. It felt like this morning people were back to their desks today, trying to get back into whatever routine they were in. But boy, yesterday was probably one of the most challenging days I had in a long time. And if you watched the video yesterday, right, I threw some fuel on the fire yesterday because didn't expect much on Monday and that wasn't ready on Monday. Well, remember what I said yesterday? Was not going to let that happen again today. So this morning, even though we weren't expecting much, today was Fed Day, right? As if we need more reasons, right, to be concerned, today was Fed Day. Now, Fed Day, right, means early volume, okay, early close. So what's going to happen is on a Fed Day like today, okay, here on a Tuesday morning, we had the Federal Open Market Committee, right, the FOMC announcement at 2:15. Now, what that means to us day traders is expect lots of volume early, but that should taper off early as well as people are waiting for 2:15 announcement. So we estimated we'd probably see about 10:30 we'd start seeing things start slowing down. And we definitely got that. We definitely saw about 10:30 this morning things started slowing down. And we talked about this in the morning prep this morning. All right, but remembering yesterday though, my exact words yesterday were, when you know you have possibly a rough day ahead of you, either not much going on, holiday, earthquake, right, other distractions, that is the best day, right, to be fully prepared. Made a big mistake yesterday by not being fully prepared because I didn't expect very much, and boy, you saw how difficult it was for me to pick up the pieces late in the morning. This morning, though, learned from that mistake yesterday. Ready to refocus, right? Don't try to do too much, okay? And be prepared for anything this week. That means be prepared for silent markets, right? But also be prepared for what we had this morning, which was big, bold moves, lots of volume. It did taper off early, but we got some pretty great moves early in the morning. All right, we had channels on crude this morning. The channels on crude, we saw that yesterday, and one of the things we talked about yesterday was how, and this doesn't happen just this time of year, but this is any time of year on any market. Whenever you have low volume, you're always going to see these wedges, right? These channels, right? You've got these sideways ranges. Okay, so this lower volume, we noticed yesterday on crude, we were chasing after channels all day yesterday. And the same thing was happening today. You'd have price rising on crude in a channel, then all of a sudden it would go sideways, then it would turn back down around a channel. And a lot of that has to do with the fact that there's not very much big money out there pushing things around. It's a lot of little guys like you and I during this week. Remember, this is one of the most challenging weeks of the year, right? This is OPEX, quadruple witching, at the end of the first quarter. So we knew today could be pretty much anything. It was a Fed day, so we expected a lot of volume in the early morning, and we got it. We found channels on crude, did a great job today on crude. We also defined a sideways range on the gold, and the gold actually made it pretty easy on us. We had that drop on gold this morning below 1400. So we knew that everything below 1400 would be the sell side, everything above the 1400 would be the buy side, and it just happened to line up perfectly with the wedge, right? It was a good example on gold today. We'll grab a look at that here in a second. But the sideways range on gold, 1400 being the high, 1380 or so being the low, we bought those lows, then we sold the highs, right? Trading that sideways range. This was another day where those fast track trades, we didn't get very many of them. Now we took, a dozen or so trades in the advanced method today, and we did take 3 trades in the fast track, 2 winners and 1 loss. So we came out in the green in the fast track today, and again, come in as a guest, and I'll give you guys the exact entry, stop, and target for those entries. But another day where we didn't have things lining up. Now remember, the fast track needs to be basically perfect. I have to have momentum where it needs to be. I've got to have speed where it needs to be. I've got to have enough room for the trade to work out. The reason why the fast track is very rigid, right? Very rigid with its rules. is because you're entering with a limit order. So I need to make sure that everything looks perfect before you get in. So as you can imagine, the fast track, how many times a day do we see absolute perfect patterns? Well, probably only a few times a day on a challenging week like this. So we didn't get a lot of fast track we got a lot of patterns today, but it was either momentum wasn't lining up, or we didn't have enough room, right? Or there wasn't any speed anymore. Okay, but remember, the fast track has a 10 tick target, and I really need to have at least 15 ticks of room to get in that trade. The advanced method has a 5 tick target, so all I need is about 5 to 10 ticks to get in that trade. So another day here in the room where we made a great bunch of money on the advanced method, right? You guys are probably sick and tired of me hearing this morning, sorry guys, does not fit the fast track because of whatever reason it was. But again, another day where we looked for patterns, we stayed away from the high risk patterns because again, this morning we didn't want to deviate from our plan. Focus on only the best trades during OPEX, and that's exactly what I wanted to do here for you guys as guests and as members. Now take a look real quick here at this chart. Obviously you can see here now the advanced method up top here, right? So 2, 4, 6, 8, 10, 12, 13 trades on the advanced, and only 1, 2, 3 trades on the fast track. So how did we get all these advanced method trades, but only a couple of them as fast tracks? Well, again, we just talked about that, right? I'm going to take a +5 target off on the advanced. I'll take 2 off at +5. Whereas on the fast track, I'll just have a simple profit target of +10. So I got to have this much room for the fast track. I only need this much room for the advanced. Not to mention the advanced trades, right? I'll take those on tape reading. The fast track, I actually need to get that I need to get everything perfect. So I can cheat a little bit. I can look for offsetting or what we call compensating factors on the advanced method. So if momentum doesn't look right in the advanced method, I can still use compensating factors to qualify a trade. That's much different than the fast track. The fast track, again, very rigid, right? Not very flexible. And it has to be, right? I can't have any variation. The reason why, I need to tell you as a guest exactly where to get in, exactly where to place your stop, and exactly where to take profit. Now, as a member, our members did phenomenal today. We continue to have members piling up profits in the fast track right now. Because the difference is, as a member, for example, right, this loss here at 9.10 on gold today, it was moving very quickly at that time. It was a 34 range wave pattern, but we had the 13 range trigger line as support. So I had less than enough room for the fast track. I called it as a high risk fast track. You can see it was a loss. But the members, though, chose to skip it. And they chose to skip it because there was less than 12 ticks of room. But a couple guests this morning, though, took the trade anyways and took the loss. That's why I wrote it down. Right? It was called as a high-risk fast track at 9.10 for that loss. But that was a great example of where a lot of the members this morning skipped it. They said, sorry, Joe, you have less than 12 ticks of room, less than 15 ticks of room, less than amount of room to let this trade really run, and they stayed away from it. So as a guest, remember, you're not going to know, right, the good from the bad. I'm going to give you the entry, stop, and target. And we usually hit our goal each day. This week's been tough, though, obviously, with OPEX. But you can see, though, right, the rest of the month's been great. We've hit our goal, right, more times than not. So you're going to make, on average, about 30 ticks, right, per contract per day here as a guest. All right, as a member, you'll be able to kind of use some experience. Remember, we're going to train you on these fast track trades. So as a member, you're going to know well in advance if it's going to be a trade that you want to take or a trade you don't want to take. As a guest, we'll have a little more difficulty with that because you're not trained yet. All right, so I've got to really make sure that I give you guys the perfect entries there for all those guests out there. If you're a member, you're trained on this stuff. But the guests, I want to make sure you guys get into those perfect trades. So you can see here, 281 ticks on the advancement today, guys. 10 ticks or $100 on the fast track, right? 28.10 on the advanced method, $100 in the fast track, 36.80 for the week here. Now we lost $200 yesterday in the fast track. There's 2 stops in the fast track yesterday, so we're still digging out of the hole here. We've made $24.75 this month in the fast track per contract, and we've made $19,000 here in the advanced method on 4 contracts.